Coinbase Chief Executive Officer Brian Armstrong revealing that the crypto exchange received more than a Wells notice from the Securities and Exchange Commission before the agency sued the company for allegedly ignoring requirements to register with the SEC. According to the Financial Times, the SEC asked Coinbase to halt all trading in cryptocurrencies aside from Bitcoin. Coinbase's Armstrong said the inquiry would have solidified, quote, an end of the crypto industry in the U.S. This as the crypto exchange prepares to report earnings after the close on Thursday. Of course, crypto is a lot bigger than Coinbase or even Bitcoin. For more on the state of the industry more broadly, we're joined by Mathew McDermott, Goldman Sachs Global Head of Digital Assets. So, Mathew, first of all, thank you so much for joining us. We really appreciate it. You guys have been investing in a number of different areas of digital assets and blockchain, for that matter, and tokenization. You've covered a lot of different parts of it. But I want to ask you very broadly, the regulatory framework, particularly in the United States, what effect that has had on your thinking about how and where to invest?
Look, a very good question. And firstly, thank you very much for having me. I think from our perspective, we are a geographical team. We've got presence across the globe. And so we've tended to just really kind of think about where we can progress the business. And as you kind of highlighted at the onset, there are many different facets to what we do. There is the tokenization and digitizing of the life cycle. There is the collateral mobility, where we're really thinking through how we can re-architect the financial plumbing of the market. Cash-settled crypto products obviously play into kind of a key part of the business. And so really, we work very closely as a regulated entity with our regulators and have identified, areas that we really can use the underlying technology to move the business forward. I think it's quite obvious when we look at different geographies, look at Europe, for example, the markets in crypto assets directive that was approved a couple of weeks or 3 or 4 weeks ago in Europe is a good example of certain jurisdictions probably moving a little quicker than others. We also see Singapore, Switzerland, and even Hong Kong moving at a greater pace, from a regulatory perspective.
And so even with all of that in mind, where does Goldman Sachs remain the most bullish on cryptocurrency as a whole? Do you believe that the worst of the crypto ice age is behind us?
Yeah, I tend to think about it kind of digital assets more broadly, and we've probably not been more excited in terms of what we can think about doing across the financial market with the underlying technology. And so there, we've got a large number of different projects that we're undertaking. We've developed our own digital asset platform, for which we've just recently won an award, which is great. So we really think that the market, just more broadly, be that the sell side, the buy side, the FMIs, see a really kind of interesting and transformative impact of that underlying technology. And there's no kind of coincidence that you suddenly started to see more digital asset teams and strategies emerge globally across all of these different institutions, as they've all come on the kind of similar journey to me from 2020 right through to today. And that regulatory landscape that you touched on right at the beginning, has evolved in that time as well. And we've just seen, kind of regulations, like I said, across those geographies be either kind of progressed to be enacted or in progress. And so that really provides confidence, which encourages investment. And so you then think about, why do people do this? Look at the commercial drivers. And once you start to think about how transformative this technology can be in terms of digitizing that life cycle, making it more efficient, that whole speed of settlement. We did a transaction, for example, for the European Investment Bank, where the typical kind of settlement cycle is T+5. The transaction settled in 60 seconds. The digital asset platform for native digital asset issuance, for example, can be the authoritative source of truth. So you just remove all of the frictions in and around reconciliation. So you're starting to see the kind of the art of the possible. Similarly, when we think about this whole re-architecture of the financial plumbing, which sounds pretty grandiose, but really looking at those intraday markets, repo, securities finance, we've only got a foretaste of what this technology can do today, and it's already quite transformative. We operate in a macro backdrop where capital and liquidity proficiency is really key. And so that ability to use the precision of the technology to really kind of showcase how these markets can be transformed is hugely powerful. And people who've been on that journey recognize that.
So, Mathew, just to take a big step back for just a second here, because I think most of our audience, most of the way that lay people have understood crypto and digital assets writ large over the last, call it 10 years, has been through something like Bitcoin, has been through cryptocurrencies specifically.
Absolutely.
What you're talking about is really infrastructure effectively, right? I mean, how would you, in the simplest terms, sort of explain what you're talking about and where we are in that life cycle?
And I think a really good way to do that actually is to think about how that journey has taken place. So kind of in 2020 to 21, you had a huge swathe of those traditional financial institutions looking at Bitcoin and Ethereum and just trying to work out, given the sudden appreciation in the pricing of those cryptocurrencies, what does this mean for their business? How can they be more actively involved? And you found a lot hugely interested by the developments, and there's been some exceptional development in those markets. But seeing how that underlying technology then could really transform their own businesses and seeing how you could apply that to financial services. And it's that application to financial services that really has caught the imagination, like I say, of a good cross-section of the financial markets, the buy side, the sells, the FMIs. And it really can, at scale, have a transformative impact. We're such a nascent part of the market, but the trends are really moving positively.
So if I'm a retail investor watching this show and I say, I want to take advantage of this either as a platform or as an investor, I want to know what companies are using this because I'm excited about it. How would they go about doing that? I mean, obviously, you work for Goldman Sachs, and Goldman Sachs is doing that, so that's an example. But how would they also apply it as they look around?
I think it's a really good question. I think the retail kind of has driven this marketplace. I mean, cryptocurrencies, as you said, was a key driver initially for people really focused on this. And I think the regulatory clarity that you see there, I think will now encourage more of the traditional financial players to enter the market. And so that actually provides a much sounder and safer market, because you have people who know and understand regulations be more actively involved in the market. With respect to tokenization, you're starting to see with some of the fintechs this kind of fractionalization of asset classes. And so over time, and I do think it will be time, you'll actually see a greater opportunity for that cohort to invest in different asset classes than they otherwise wouldn't have access to today. And the seamless nature with which information can become more transparent really does kind of aid that whole investment decision making. So I do think, from a retail perspective, a retail investor perspective, is probably something that will kind of evolve over time. But I think it really will be quite powerful on the forward. From point in time is,
no. I was just going to kind of layer on and ask from your perspective, what is the relationship right now between, and in your acknowledgement of retail investors having driven so much of the early days and the ramp up of crypto or digital currencies to the point where institutions had to take notice and had to create offerings and had to create technology as well that could then scale it up even more? What is the continued relationship between kind of both sides of that within digital currency, where you've got that retail side that's looking at large banks and saying, well, they've got way more money to throw around at this than I do. However, at the same time, you've got the larger institutions that are trying to figure out how they don't miss out on the fervor and the demand of this digital currency environment right now.
Yeah, I think retail kind of obviously was the kind of, they ignited the interest and kind of intrigue in and around the technology. As that technology has, matured and continues to do so, because like I said, it really is kind of at a very nascent stage in the context of institutional adoption. It's that technology that really has kind of opened the eyes of the art of the possible in terms of applying that to different financial markets. So cryptocurrency in itself is obviously a specific kind of part of the market. Actually seeing how that underlying technology can improve the way things operate today in the financial markets has been very powerful. There's a lot that needs to happen before we get significant adoption, but I think it's that kind of opening the eyes and that transparency in terms of what the technology can do that has truly kind of, I think, ignited that institutional interest and investment and focus that we see today.
Mathew McDermott, Goldman Sachs Global Head of Digital Assets. Thanks so much for taking the time here with us today.
My pleasure. Thank you for having me.
Certainly.
Thanks.